The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, The Money Masters.
Good morning, Money Masters and Treasure Hunters. Welcome to the February 6th wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. And my outcome, as always, is to help you to become a better Money Master and, folks, to provide you with the tools so that you can just simply achieve your empowering human potential out there. So let's go take a look at one of these tools. This is a tool that I call setting compelling goals. You want to go where the expectations, folks, are so strong that they will provoke you, that they will push you, that they will urgently insist that you not remain in one place out there. That way, you will grow and change. It is all about growth and change out there. Let's go take a look at the change in the marketplace here right now. We've got the Dow trading off 42 points, Composite down 8, S&P's off 4, Russell 2000 down 3, Google's up 275, Apple off $4 and change. We'll start off taking a look at the Apple chart here. Our call-in number, as always, is 877-927-6648. Would absolutely love to hear from you folks. As we take a look at Apple, we can see here Apple still unable to break above the gap down from January 24th out here, just really trading sideways ever since that gap down. And we know when a market moves sideways, what is it doing? Well, two things. In this case here, Apple got into that oversold condition, needed to work that self off, needed to work it off, and it's working itself off by moving sideways. Also, when you move sideways, you're consolidating. When you're consolidating, you're building energy. You're building energy to do what? In a consolidation pattern, what do? Where do you typically break to in a consolidation pattern? That's right, you break in the continued direction in which it came from. Well, we know Apple's got a confirmed A to B equals CD. The 1-to-1 takes you down into that 395 level. 395. And what it's got to get through here, it's got to get through this little gap that is open that takes you back to January 25th. 395.67 is the 1-to-1. I suspect it's really in about the 340 mark. Apple here building cause by moving sideways, working off that oversold condition, building cause, consolidating to move lower. Not until it gets above or closes above 465.73 will the message of the market say anything other than that. That is on Apple. Popping out here in the markets, Ralph Lauren leading the charge up a nice $11.89 this morning. That's up 7%. Priceline up $10. Priceline out with numbers last night. So we'll go take a look at the Priceline chart. I believe they were out with numbers last night. Let's go take a look at Priceline here and see what it is trading into. Priceline here this morning, right now, trading out at 701.20. I thought at one point in time last night, I was listening to Tom's show, and I thought Priceline at one time had been up in the pre-market about $25. Certainly hasn't done that here today. But Priceline looks like what it wants to do here. If we take a look at the swing point high, which was really from a couple trading sessions ago, January 28th, makes a high with 925,000 shares. That's after moving up with conviction on the 25th with 1.5 million shares. Still trading inside that bar. That high wants to be tagged out there. That is the level of 721.96. So far today, volume-wise, 194,000 shares, tagging at least the low of the most recent swing point high, which is January 28th out there. That low is 740, trading 740, trading just inside that as we speak. Let's go take none other than the New York Stock Exchange. We take a look at the New York Stock Exchange right now, trading down, gap down a little bit. Now, didn't create a full gap. I'm just talking about from yesterday's close out there. Right now, the New York Stock Exchange is off 19 points, about 0.2% out here. The island reversal is still out there, still intact until you get a close above that 89.70.32. That is the high, session high from Friday out here. the New York Stock Exchange still giving the best signal overall that the market is making a slow roll. Got the summation index still pointed down to sideways. Number of indicators out there say the New York Stock Exchange is going to make its way down. Let's go to Peter in Palm Beach, Florida. Peter, thanks for calling. Thanks for holding. How are you today?
Good. How are you?
I'm doing excellent. Excellent. You wanted to take a look at the stock symbol DCTH. I'm not familiar with it, but we'll go ahead and pull it up. Tell us what it is, what you're doing, and how we can be of assistance.
Yeah, basically I'm long the stock, and I'm just looking to see what the trend is.
And what do these guys do? Have you been in this trade for a while? Is it a long-term investment for you? What's the time frame that you're looking at?
Yeah, basically they have an NDA with the FDA. It's a chemostat process that they're dealing with and waiting to get approval on June 15th. So there seems to be some interest, and it's been moving up over the last maybe couple of weeks.
Okay. Have you been in this so are you looking at this from a longer-term standpoint? You like to hold it for a longer term? Is that what you're trying to do, or?
Correct. Holding it through June 15th. Through
June 15th. Okay. So if we take a look at, again, the stock ticker symbol, folks, is DCTH. The name on this is Delcath, or I don't know if the L is actually pronounced. Delcath, maybe, Systems out there. Maybe a little French company, I don't know. But if we take a look at this, had some real nice volume in this come in the equity on February 4th, so 2 trading sessions ago, 7.5 million shares. This equity here, Peter, has been doing the Basel-Chapman walk. That's walking the 9-period EMA. That is your level of support out here. Are you watching us on Tiger TV?
Yes, I am.
Okay, so you can see that blue line in the chart here. You can see how that has really acted as a pretty good support area ever since the January 2nd time frame. So, if it closes below that, that would not be a good signal. It has moved into the overbought territory, trying to work that itself off by just simply moving sideways. This has not made it up to the black line going across the chart here, happens to be the 200-day moving average out here, and hasn't made it up here really in quite some time, going all the way back to March 2nd out there. So this has some resistance out here. There was a gap down with some volume. Did they have some bad news or something that might have come out around October 15th? Do you know?
Yeah, I believe they did a secondary.
Secondary, okay. So that secondary on October 15th set up a resistance level. Now, that resistance level has not been tested. So that's where, assuming that this continues to walk the 9 EMA, and that means that it could easily go ahead and pull back while it works off this overbought condition out here. So that would be not a big deal. What we can see is that there's a little convergence that is setting up here, which is that secondary, or that gap down with 6.2 million shares, 6.5 million shares on October 15th, and the price high there is 190. And right now the 200-day exponential moving average is 193. So I suspect that is where you're going to get a release of information. Looks like it wants to travel up there. You've got some, you've got a couple of, it looks to me like you are, what's the word that I want? You are a race car driver. What do they do? Drafting. So it looks to me like you're drafting some of the bulls out here. So it looks like a pretty good trade setup for you. Longer term, if I go ahead and put so that's really your parameters on that. Does that help you out at least on the daily piece of it? Uh-oh. Peter, you there?
I'm here.
Okay. Hope that helps out on the daily piece. I'm going to put this on a longer-term chart here and just see what it is that we're looking at, see if there's any volume out here. So the danger in this equity, I don't know if there was a change of hands or anything, but this thing had some major volume off of the highs going back to June 11th, 2010. Big institutional selling. Looks like this may have a habit of disappointing because it did the same thing back in February of 2011, 17 million shares on the weekly chart. So that kind of a signature here kind of makes you say, because the last time it did it was back in May of 2012 out there. So you don't have a lot of folks in the money out here. But those are the. What I was really looking for you, Peter, was some type of high volume high out there. The only one that you have is October 12th, 2012, and that's at the 239 to 204 level. So it looks to me like that's where it wants to head to If it doesn't come into that level with volume, long-term buy would have to be from a fundamental standpoint, not from any technical standpoint that I see out here.
Okay, great.
All righty.
Appreciate
Hey, thanks so much for listening. Thanks so much for calling.
Thank you.
You bet. Have a great day.
You too. Bye.
Let's go back and take a look at the indexes out here. As we take a look at the indexes, let's go ahead and put the S&P 500 up on the chart, and then we'll go take a look at the SPYs, see what the SPYs are doing. Yesterday, the S&P 500 getting just slightly above, getting up to 1514.96. That was just slightly above the February 1st high out there. Again, we've got a little slow roll. We had a one-day wonder with the bears coming out with bearish candles across the board. The bulls trying to take a charge again yesterday out here on the S&P 500. I give the advantage right now to the bulls. However, the 1.272 butterfly, I mean, that is a beautiful pattern. We have had bears show up in the marketplace, so this is where, if you were considering going short, this is the place to be doing it right here, right now. If you and just simply make sure you use a position size tool to identify that. You can do it just simply whatever vehicle it is that you trade. What you'd like to do, folks, you'd like to understand what the last 10 days average true range is. Now, there's a free tool on the homepage of TFNN.com. If you go over there in the left-hand side, you'll see an up arrow and down arrow. It says power of position sizing. Go ahead and click on that. If you have not tested out, you can access that for 30 days, and or just go ahead and do the calculations manually yourself. Figure out what your trading capital is, your free trading capital. Take 1% of that. So if it's $10,000, it would be $100, and you then identify your stop. That's really all that you've got to do, and it should be some expansion of the average true range. My suggestion, 1.618 or 1.272 of whatever that is, and then once you have that, now you know what your stop is. Divide your $100, if it happens to be $10,000 in trading capital, buy your stop, and that's how many shares you would buy, and then put that stop in place. Make that a hard stop. Go ahead and monitor it, but make sure that you put your stop in place. Likewise, make sure you put your exit in place. Have an exit strategy. That is what all successful businesses do, and this is nothing more than just simply running a business out there. Don't overtrade. Just simply run it like a business. So the S&P 500 right now, where we should expect this one, if the 1.272 butterfly works, you should expect the S&P to pull back to 1449. That's the first level. That is the 0.382 retracement. It'll get a little bit of turbulence as it moves back into the January 2nd high out there. Why? Because that wide-ranging bar, that is where the bulls are really hitting out on the S&P. Of course, just above that level is the September 14th high. That is 1474.51. So that is an old resistance area. Old resistance becomes new support. That hasn't been tested. So really, as your flight pilot out here, it's at the 1475 level that I would put on the put on your seat belts, folks, because you should see a little bit of turbulence. But ideally, out here, like all equities that make expansion patterns, they eventually make a 0.618 retracement. That on the S&P is 1408. 877-927-6648. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to the Money Masters show. Right now, we've got the Dow off 32, the S&P off 3, the NASDAQ off 6. Over in Germany here, the DAX is off of its session lows, still down 94%, down 1.23% right now. The FTSE almost flat, down $1.55 out there. You've got gold here up $3, trading out at $16.76. Silver down 13 pennies. Light sweet crude off 95 cents off of its session lows. Light sweet crude is headed lower. Let's go out to Altamont Springs to Ken. Ken, thanks for calling. Thanks for holding. How are you this morning?
I'm doing fine. How are you doing today, Steve?
Absolutely excellent. Thanks for asking. You'd like to look at ConocoPhillips?
Yeah, I'm looking at a daily chart, and I'm wondering if you think it'll go past that swing point low on December 31st, which was 56.84.
Yes. Are you in the trade, looking to get in, short the trade? What?
I'm short
or just
to
looking
trade.
at it?
I'm short to trade, and I have a weekly put option. I've already more than doubled my money on it, and I was kind of wondering how long do you hold it?
Okay, so if we take a look at it, you've identified the swing point, folks, and what Ken is looking at is that December 31st swing point. So ConocoPhillips here weaker than the market. So from a short side, that's a good thing. And where the battle in this equity is going to be is at that swing point low of 56.84. That is a bullish engulfing candle that you've got out there. So not only is just a test of a swing point, which it hasn't done just yet. That low is 56.84, and you've got 6.8 million shares. Now, as ConocoPhillips was coming into that swing point, it did it on January 31st with 16 million shares and closed inside it. And then yesterday was 7.7 million shares. So 7.7 coming into 6.8. What this says is that the low should at least be tested, 56.84. What you've also got just underneath where it's traded to this morning is that 200-period exponential moving average. That's at about the 56.96 level. So you're going to find out whether or not this holds as support for you. And if it does and it gives you some kind of bullish candle like today, it could actually go down and test that, and it could give you a hammer candle. Hammer candle would mean it would have to close maybe somewhere around, let's see, the high is 57.50, probably around 57.40, 57.45, something like that, or above the 57.50. Could also create a hammer right at around 57.60, something like that. But it looks to me like it at least wants to test that low. It's not in oversold condition. It has dropped below the 200-day EMA. If you do get a close, so this would be good for you. If you do get a close below December 31st and below that 200-day EMA, what it will do is it'll move its way all the way back into that gap up from November 16th out there. So that's what the trade looks like to me. You know, there's one of the beautiful things about being in a trade like you are in. Nothing wrong with at least getting your principal off the table.
Yeah, I'm going to do that before the morning's over with.
Yeah, you know, because, I mean, you're just simply in an area that's either going to act as support or not. You know, like I say, it came down in volume. Volume has been dissipating over the last couple of trading sessions, but nothing like nothing like making money out there.
Yeah. Okay.
All right.
Thanks a lot. I really appreciate it.
Hey, my pleasure, and thanks so much for calling. Have a great day, and congratulations on a great trade out there. Let's go take a look at the ETF indices out here. Let's go peek in. We were looking at the S&P 500 before. Now let's go take a look at the SPYs. You'll see the same pattern out here. You'll see the same 1.272 butterfly that was created. It was formed really on Friday out there as the S&P moved up with 131 million. The SPYs moved up with 131 million, then down with 158, then back up yesterday with 113. Something to think about out there. So just really forming a top out here in the marketplace. The 151.48 getting just over Friday's level of 151.42, doing it on lighter volume out there. That's another signal in the marketplace as well that you are starting to see a slow roll of a top form out here. Of course, you could also say, because it's just traveling sideways, that it is beginning to work off the overbought condition out here. But I suspect we're looking at more like a roll, a slow roll out here, and where you can take a look at the SPY moving down to first level 145.03 makes absolute sense, because the bottom of the gap up from January 2nd out there is 144.73. So that is your first stop on the SPYs if, in fact, it does roll over to the downside. Second stop, though, 141.09, more likely the test of the low of December 31st out there, just like we were looking at with Ken in Altamont Springs on ConocoPhillips. These markets, too, want to go test that December 31st area. They want to see how convincing the bulls are. 877-927-6648. We'll be right back, folks.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks, to the Money Masters Show. Right now, we've got the Dow off 43, the S&P's off 4, NASDAQ down 10, and taking a quick peek in on silver and gold. I've got the weekly chart up on my screen if you are following along on Tiger TV. Now, the weekly chart of silver looks so much nicer than gold, and what I've got notated on the chart here are the, well, I've got at least through QE3. I don't have QE4 through infinity out here marked on the chart. But what you really want to be paying attention to is that trend line. And after the announcement of QE1 back in November of 2008, what I'm actually using is a swing point low from October 31st, 2008 out there. And we're just looking at a trend line. The next touch on the trend is really down at the lows of February 5th. 2010. But what you can see here is silver, danced around the lows here, did it for a time period of back in June of 2012 level before it actually really took off back in August 24th, 2012. And you can see, it was tested several weeks back in the early part of January, and this area has held. So silver, looking now, doesn't when we take a look at the blue and red squiggly line on my chart, that is the 10 and 40-week moving average, so the equivalent of the 50 and 200-day exponential moving averages. They're really kissing each other right now, 31.52 and 31.53, so no real read out there. But if I switch over here to gold, you'll see on the gold contract, using that same trend line coming off of the October 24, 2008 level, you will see that gold broke through that area with conviction on the week of May 11, 2012. Got back inside it for a bit, for about a month, and is trading back below that area. Says to me, okay, so gold is weaker than silver, and more likely now what you've got is you've really got this sideways horizontal trading range that gold is trading in. It's really clear when you put this on a weekly chart. At least it's clear to me. The highs of that being the November 11th, 11, highs of 1804 level. That is your resistance, and we know that support is right down at about the 1535-ish range. So that is where gold is traveling in. Let's go out to Concord, Massachusetts, to our man, Mark. Mark, thanks for calling. Thanks for holding. How are you today?
I'm fine, Steve. Getting ready for a big snowstorm.
Oh, really? What's the forecast?
Forecast, Friday afternoon into Saturday morning, 1 to 2 feet in the Boston area.
Oh, my goodness. Now, that would be your biggest snowstorm of the year?
That would be the biggest snowstorm of this year and last also, I think.
Oh, okay. Well,
but
hey,
'tis the season to have snow, I guess.
Well, hey, that's it's not too late to hop on a airplane and come on down to Florida. You could be laying on the beaches, and then every now and then you could probably peek into one of the tiki bars, while you're getting your.
But that may be true. That may be true. But I can't build my snowman.
Ah, okay, all right. What's the biggest snowman that you've ever built?
Oh, I don't know. It was with my wife a couple of years ago. When my wife first came into the country, she had never seen snow before, so this was kind of a party for her.
Oh, okay, cool. Okay,
yeah.
Cool. If you build this, go ahead.
I want to get to my question because I don't mean to cut you off, but it's kind of a long one, and it's a clarification of what Tommy said last night on his 4 o'clock show that I wanted your take on.
Sure.
And he
mentioned... Now, whatever he said, that's it. I got the answer. It's done. I'm not going against him.
Well, this is why I really wish Tom would be would be more on this program, because I know this is the Money Masters as in plural, so I would like to get both of you together sometime.
We will do that. He's putting people to work, man. He's driving this economy. Thank goodness we got guys like Tom out there. But go ahead.
Anyway,
ask your question. I'll give you my take on Apple. I didn't hear his take, so I've got to give you my take.
It's in relation to what else he said. He had made a comment in his opening monologue about that the NASDAQ gets up, that I don't remember exactly what it was, gets up to a certain point and then stops there. But then later on he said that there's a gap in Apple that goes out to the 24th of last month, and I got it on my chart here.
Yes.
And he said that gap may be filled. He said that Apple may want to try and get that. He didn't say it was going to. He said may. Now, if that gap does try and get filled, and Apple is down now 4.5 points on the day, but if Apple tries and does fill that gap, that's going to bring the NASDAQ over that threshold, won't it?
Yeah, so let me now. Okay, I'll give you my take versus try to interpret what he did. But let me give you my take, and maybe hopefully the two of them correlate out here and they're consistent.
Okay.
So what we've got is, and I'll put this together for you. And we're taking a look at the Apple chart here first on Tiger TV. And yes, we're looking at the gap down from January 24th, and that high is 465.73. Now the bulls have come to work for 2 days since then. A little piercing pattern on January 28th. In fact, even the next day when it moved up a little bit higher. And then yesterday you had a little a bull sash candle. But what it hasn't been able to do yet, Mark, it has not been able to even test the high of 465.73. My assumption would be what Tom would have said is if it closes above 465.73, volume or not, once you're into the gap, then you could go ahead and you could fill that gap. which would be up to the January 23rd level of 504.77. Once you get into a gap area, though, you never know if it's going to completely fill it or what have you. So my presumption, or my take is simply that, and that is if Apple, in fact, does close above 465.73. Look, if it does it with volume, meaning more than 52 million shares, then yes, it'll go close the gap. If it does it on less than that, it could just simply make a 0.618 retracement. It could go completely gap. The 0.618 retracement on it would take you to about 484.43, which would take you right back to the January 15th swing point low.
That's fine, Steve. But what the disconnect for me was that when Tom talked about the NASDAQ getting up to that point, up to that threshold, and then always backing down, I said, okay, what Tom is forgetting is the marriage between the NASDAQ and Apple. If Apple gets tries to run and fill the gap, it will go over that threshold for the NASDAQ.
And I'm sure that what Tom was talking about was the NDX 100 versus the NASDAQ Composite. So just want to clarify that. And so now I've got the NASDAQ 100 on my screen. So we've got the NDX 100. And what you can see that the NDX 100 is doing, it has been traveling for now, I don't know, over a month. You've got 25, 26, something like that, trading sessions. Go back to January 2nd. I'm not going to count them for you here. But that January 2nd high, which is 2746.50, and the January 2nd low, which is 2716.30, has really held price in check. And it has been traveling sideways. Now, on a consolidation basis, when you consolidate like this, your probability is that the breakout of a consolidation is in the direction that it was coming from. Well, in this case here, I give more weight to the direction that it was coming from, like the rest of the markets. It's coming from the bottom, that it could actually break out of there and complete a 0.786 Gartley sell pattern. That would take it to 28.03. And certainly Apple closing above that gap and moving higher would put that kind of energy into it. However, volume still ends up being more to the downside than to the upside, so we really don't know. It's in this consolidation pattern. I suspect, based on what I'm seeing with regard to other signals in the market, primarily the New York Stock Exchange out there, that what we're really seeing here is we're seeing a slow roll to the downside. And what we'll see is the NDX 100 actually fill the gap to the downside, get back into the December 31st candle out here. But, to me, it's a matter of just watching the markets, and when we get a signal, we'll know, and then you go ahead and you take your trading. But that, to me, that's how it's I would put it together. That's how I would equate it, and it really is the same thing, Mark. If you go take a look at the Qs out there, if we take a look at the Qs, we go over to the ETF structure, you're going to see the same thing that you're seeing on the NDX, that it said January 2nd candle where price is traveling within, and it has been consolidating sideways for quite some time. On the Qs here, you can see you had volume to the downside 2 days ago with 48 million shares, and the volume to the upside, the highest volume we've had so far, was the breakaway gap, the island reversal on January 23rd with 31 million shares. You had good volume yesterday, 35 million, but that was going against 48 million. Pressure is to the downside, and Apple just can't get out of its way right now. I think Apple is really building cause, moving over the oversold condition, and is going to go ahead and break out those lows. And that's what it looks like to me. So does that help?
It does a little bit. When I'm sitting here listening to Tom, and I went back this morning, listened to the archive of last night's show, twice, as a matter of fact, and I just said, well, it seems like in Tom describing with the NASDAQ trying to get up to that threshold and stopping, he's not putting Apple into the equation. And
he is. He's putting Apple into the equation.
Okay.
Yeah, but he's not saying he's not. I don't know what he said, but I don't think he said it's going to go fill that gap just yet.
No,
I'm pretty sure it was if it closed over that swing point, it would fill it.
Yeah. He was talking about May. So we all agree that Apple is such a gorilla in terms of the NASDAQ. So what Apple does, so goes the NASDAQ to a degree. So I was just wondering the the marriage between the two is what I try to figure out, basically.
Well, you do have one stock that's now down to about 15% or so, but you got the other 99, that are out there. So you've got, stocks like Google and Priceline and, Wynn Resorts and others that are trying to push things higher. But, Mark, it looks to me like a slow roll to the downside. All righty?
Okay, my friend. Well, unfortunately, I can't invite you up for a snowman, but... And
it's an invitation I would appreciate, but I would decline.
Well, I'm aware that summertime's a different story. Oh, actually, I'd come up there to watch a hockey game. That would be okay. How are the Bruins doing?
The
Bean Pot was last Monday and this Monday.
Ah, okay.
You know what the Bean Pot is, don't you?
Yes.
Okay, well, I'm glad that my Northeastern won. So.
All righty.
Yeah, okay.
Hey, thanks
Steve,
for calling, Mark. You have a great day.
You too,
Let's
Steve.
go.
Bye-bye.
You bet. Let's go to, let's see, we've got Max in Houston. Max, thanks for calling. Thanks for holding. How are you today?
I'm doing just fine. Good morning, Steve. The question I have is a follow-up question on the S&P 500, and the reason I have it is because I'm not as far, in the learning curve where I should be or where I would want to be.
Well, we'll get you there.
I know, and that's why I'm listening, and I really appreciate every one of the hosts at TFNN. So my question is, it appears that the market is doing this slow roll. Now, my frustration comes along in which I can see the RSI, I can see the Fibonacci levels, and I understand all that. Is how do we gauge how long this roll will take, to break to the downside?
No real way.
Yeah,
there's no way to gauge it. I wouldn't, I wouldn't, from a timing standpoint, that's a question that, that I can't answer for you. What I can answer for you is that you've got this 1.272 butterfly. We've got the battle going on between the Bulls and the Bears. And if you use the right money management strategy, it's an ideal place to be able to put on a short trade. Because it's like your back is really up against the wall. You get to close above the 15-ish area with some conviction, some volume behind the move. It means that we were wrong on the trade, and it means that price would go ahead and move up to the 1.618 level. It also means for people that would like to play a continuation play, if the money management works out, it means that you could expect the S&Ps to move up into the 1555 type level, 1560 level out there. So it would depend on how much above, with conviction, it would close above the 1515. So I think it's more so the standpoint that the timing is right. If you were inclined to take a short trade, if you're not inclined to take a short trade, the timing is right to be taking a look at equities that you would want to buy on some type of pullback, and that's also another good idea. So you could go take a look at what have been some of the strong performers. Have there been some equities out here that may be new leadership? And then go take a look at those stock charts and identify, okay, if the market does pull back from here, maybe some of those are overbought as well. Where would good buying areas be? So I think either of those two. But from a timing standpoint, no way for me to know, and I don't know who can answer that question for you.
Well, see, the concern I have is that, I have options. I have several option contracts, and it's not a whole, it's a very small percentage of my portfolio.
Yes.
The thing that I see is like a 2011 where the market keeps going up and up and up on lower and lower and lower and lower volume, and then you wake up one day and it's up 30% and you haven't participated because the volume doesn't, it's not telling you, it has any conviction.
Absolutely. So when the options trade, you should really be doing, my recommendation is really doing the same thing, which is not risking more than 1%. So, on a $10,000 account, it would be $100 that would be your total risk out there. So you don't want to, you got more leverage, but the only thing that you can control, because I can't control time, I can't control what the market does, but I can control the risk. Just don't overtrade. Don't just because you're saying, hey, you've got this great leverage that you would overtrade. You really don't want to do that. And then all that's up at risk is 1% of your trading capital. So that's how I would take a look at it.
No problem. So then, in summary, if we see the S&P break 1515 with conviction or volume, then it's time to check out.
Yeah, I think then it's going. Then I think it's going up to the 1555 level. Yes.
Yeah. All right. Well, thank you very much, Steve.
Hey, you bet. Thanks so much for calling, Max. We get back, we're going to go back out to Houston. We're going to go to Andre. Right now, we've got the Dow off 34, S&P's off 3. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Great moments are born from great opportunity, and that's what you have here. The opportunity to answer the questions, should I buy or should I sell? Should I be in or should I be out? Hi, I'm Steve Rhodes with TFNN, and I produced a free report, Reading the Message of the Markets, where I'll teach you how to use a set of tools that will answer these questions. Go to the homepage of TFNN.com right now and download Reading the Message of the Markets. This free special report includes step-by-step video examples that would have had you out of the market before the crash of 1929, before the crash of 1987, and would have had you back in the markets buying at the bottoms. This set of tools works on all time frames and all instruments. This set of tools will shape your trading and investing future. Folks, this moment will never be here again. The only cost is not taking action. You were born to be a money master, and the time is now. Go to the homepage of TFNN.com and order Reading the Message of the Markets.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back to the Money Masters Show, folks. Right now, the Dow's off 24, composite down 4.5, S&P's off 1, and let's go back out to Houston to Andre. Andre, thanks for calling. Thanks for holding. How are you this morning?
Yeah, good morning.
Excellent, excellent.
Kind of nervous being on the on the site with everybody.
Hey, you know what? Hey, you got a great radio voice. Are you in radio?
No, sir, I'm not.
You're not? Oh, well, maybe you should be. You might want to consider taking it up. You got a great radio voice. Nothing to be nervous about. And thanks so much.
Great, man. It's a great time, man.
Thanks for overcoming that little fear. That's always a good thing. That's a good growth thing. So let's go see how we can help you grow and take a look at a stock chart. You wanted to look at National Oil Well Varco, I believe. Is that correct?
Correct.
Tell us how I can help you out.
I'm on a daily. Of course, I'm short.
Okay.
My thing was managing.
Congratulations.
Oh man, you ain't lying. How to manage my position when it comes for short covering, because I have humongous volume pouring out of it. I see the swing points that it's going into, but that doesn't necessarily mean that the bulls are going to short their heads or short covering is going to happen at that time frame, because you look on the weekly, it already blew it out according to volume already, just not by price yet.
Yeah.
So,
yeah. I think
on my hourly, the RSI and stochastic is like severely oversold.
Yeah.
So, I mean, I don't know how to manage it when short covering is about to occur.
Well, are you looking at this, when you entered the trade, was it based on, which chart time frame was it based on? Was it based on the daily?
Daily.
Okay.
I look between the daily and the weekly, then I'll look at my hourly and daily on how to manage it. And then on my weekly, it's kind of like my good target price of ultimately where I think it's leading to.
Okay. So, look, if you're in a great trade, so congratulations on that. And sometimes one way, so it is coming into the swing point here. This is a little reversal candle situation back in the time frame of the middle of December. And so that is where it's headed to, which is somewhere around the 64-ish and a change. It's at 66.77. You haven't seen any bulls, showing up to the party here. And the question is, are they going to show up as it gets down into those swing point levels? And there's a couple different ways that you could manage this trade here. Number one, always remember that you can always get your principal off the table, and then you've got a free trade. So that's not a bad way to manage it. You could close out a portion of the trade. What I would be doing here now, I don't know when you got in to the trade, and that's
on the gap away. That was on the 1st of February.
The 1st of February. Okay, so did you get in right away, or are you down at the 69-ish range, 69.50-ish?
Yeah, most of the time I enter my trade at the end of the day.
End of the day, okay. So the close on that was 71.26. You're at 66.79 right now. So that's a nice little profit that you've got in there. And I would just what I would be doing is paying attention to wait and see if you get any kind of bullish candle. Otherwise, let this thing go down and test the lows right around that 64.90 area before you make your next decision. But always do what you're comfortable in doing, and there's never anything wrong with taking a profit. That's what this business is all about. So don't do that. Don't let a win turn into a loss. So make sure you use a stop on this. And I think you got a great trade. So I think you got a great trade, a great radio voice. I wish we had more time, but do me a favor, Andre. Call back again, maybe even tomorrow if you've got the time. All right.
Okay, appreciate it. Thank you.
You bet. Have a great day. Folks, stay tuned. Basil Chapman will be up next on Wonderful Wednesdays. We go from Basil up to Larry Pesavento, then Daryl Martin, David White, Ken Shreve. Tom will be back with you from 4 to 6. Have a great day. Look forward to seeing you in the morning. Take care, folks.